Let's talk about America's national debt, a topic that might sound dry at first but is actually both boring and terrifyingly important. It's the kind of thing most people would rather ignore, but it quietly shapes the world around us every single day. Imagine the national debt as the country's credit card, except this one has no spending limit. For decades we've been swiping it for everything from wars to welfare, infrastructure to innovation. And now the balance is higher than ever. We buy things, aircraft carriers, social programs, bridges to nowhere, even schools and hospitals, and we promise to pay later by selling Treasury bonds. It's like running a tab at the world's biggest bar, hoping someone else will pick up the check. For years, these bonds were considered the world's safest investment, a gold standard for global finance. But who actually buys them matters, a lot more than you might think. China used to be our biggest lender, holding a massive chunk of our IOUs, but that's changing fast, as they quietly reduce their holdings and look elsewhere for returns. The list of top lenders is shifting, and it's not just about money anymore, it's about power, influence, and global loyalty. Who holds our debt can sway international politics and even national security. Suddenly, who owns our debt is a high-stakes drama, not just a snoozy C-SPAN topic. It's a story with real-world consequences, unfolding in boardrooms and newsrooms around the globe. The global financial landscape is shifting beneath our feet, and the ripple effects could hit everything from your car loan interest rate to the price of your morning coffee or groceries. This isn't just an economist problem, it could soon be yours. Rising debt costs can mean higher taxes, fewer public services, and more expensive everyday goods. Tonight, we'll dive into who's backing away from our IOUs and who's stepping in to fill the gap. The answers might surprise you. Our new biggest supporters? It turns out our old friends, our allies, are stepping up, buying more of our debt than ever before. But even with friendly faces holding our debt, there are big risks for everyone involved. If confidence wavers, markets could tumble and economies could shake. Buckle up. The ride ahead is going to get bumpy, and the stakes have never been higher. China was once America's biggest foreign creditor, holding over $1 trillion of our debt. It was a codependent relationship. We needed their money, they needed a safe place for theirs. But tensions, trade wars, political spats, made China rethink. Quietly, they started selling off US Treasuries, cutting their holdings by hundreds of billions since 2013. It's not just China. The whole BRICS group, Brazil, Russia, India, China, South Africa, is moving away from the dollar. They're building their own financial systems, buying gold and talking about new reserve currencies. Russia dumped nearly all its US debt, and others are diversifying. This isn't just financial strategy, it's a political statement, a vote of no confidence in America's long-term stability. When major economies start looking for the exit, you have to ask why. They see dysfunction, ballooning debt, and the weaponization of the dollar. It's a slow-motion financial rebellion, leaving $1 trillion hole in our budget. Someone has to fill that gap. The question is, who, and what does it mean for America's future? Let's find out. With China and BRICS stepping back from buying US debt, the global financial landscape is shifting in real time. For years, these nations were major players in funding America's borrowing, but now, their priorities are changing, and their wallets are closing. In response, our closest allies are stepping up to fill the gap, taking on a bigger role in supporting the US economy. Japan, for example, now holds over $1 trillion of our debt, making it our top foreign lender by a wide margin. This is not just a financial decision, it's a sign of deep trust and interdependence between our nations. The UK, France, Ireland, and even smaller allies like Israel are also increasing their purchases of US Treasuries. Each bond they buy is a vote of confidence in America's stability and leadership. This isn't just about money, it's a strategic move in a world facing Russian aggression and Chinese ambitions. By investing in US debt, our allies are reinforcing the Western alliance, both economically and politically. Buying US debt is a political act, a way of saying, we're with you. It signals unity and shared purpose in uncertain times. Our allies are tying their economic fortunes to ours, creating a Western bloc bound by shared debt and mutual interests. This interconnectedness strengthens our collective resilience, but also means we rise and fall together. But many of these countries have their own economic problems: Brexit fallout, budget pressures, aging populations, and rising social unrest. Their willingness to buy our debt comes at a cost to their own stability. They're buying our debt while struggling at home, balancing their support for the US with the needs of their own citizens. It's a delicate act, and the pressure is mounting. It's generous, but how long can it last? The clock is ticking, and the world is watching to see if this new arrangement can hold. This shift marks a fundamental change. Our debt is now financed by friends, not rivals. That brings a sense of security, but also new vulnerabilities. That feels safer, but it also makes our alliances transactional. The relationship is no longer just about shared values, but about shared financial risk. We need them to keep buying. They need us for security. It's a delicate balance where economic and military interests are tightly linked. It's a partnership built on mutual need and growing pressure. Both sides are watching for signs of strain, knowing that any shift could have global consequences. How long can our friends keep propping us up? That's the trillion-dollar question, and the answer will shape the future of the global economy. Our allies' support comes with big risks for them. They're holding mountains of US dollars. If the dollar drops, their wealth evaporates. Every dollar they lend us is a dollar not spent at home, on hospitals, infrastructure, or social programs. They're subsidizing our economy at their own expense, which can cause political friction. If a crisis hits, say in Europe or Japan, they might need to sell US Treasuries fast. If one major ally sells, others could panic, triggering a fire sale and sending US interest rates soaring. That could spark a recession here overnight. This creates a dangerous feedback loop. We need their support, but our instability puts them at risk. Their support depends on faith in America's long-term strength. If that faith falters, their support could vanish, and our economic stability could crack. It's a friendship with a high price and no guarantee of a happy ending. The stakes are enormous for both sides. Our allies are betting on us to get our house in order, but what if we don't? The consequences could be global. Let's take a closer look at what the numbers are really telling us, beyond the headlines and speculation. As of the middle of 2024, Japan stands as the single largest foreign holder of US government debt, with a staggering $1.17 trillion invested in US Treasury securities. This is more than any other country in the world, and it marks a significant commitment to the stability and reliability of the US financial system. Meanwhile, China's holdings have dropped sharply, now sitting at just $775 billion. That's their lowest level in over a decade, reflecting a major shift in their approach to US debt and global finance. The United Kingdom has also increased its stake, now holding over $700 billion. Even smaller countries like Belgium and Luxembourg have become significant players, each holding tens of billions in US debt. France and Israel too have quietly boosted their investments, signaling a broader trend among US allies to step up their support. This collective move by America's allies has helped offset China's retreat, ensuring that demand for US debt remains strong even as the global landscape shifts. The pace of change is dramatic. European and Japanese investors are snapping up US bonds at a record pace, drawn in by the promise of higher interest rates compared to what they can get at home. For these investors, a US Treasury bond paying 4% is a far better deal than the near zero or even negative rates they face in their own countries. It's a rare opportunity for steady returns in a world of uncertainty. But it's not just about chasing profits. For many, buying US debt is also a strategic decision, a way to align themselves with the US financial system and maintain close economic ties. Still, beneath the surface, there are growing signs of strain. The global appetite for US debt isn't limitless. The US government must sell trillions of dollars in new debt every year just to keep up with its spending, and sometimes the demand at Treasury auctions falls short of expectations. When demand is weak, the government is forced to offer even higher interest rates to attract buyers, which can ripple through the entire financial system. Even with the support of allies, America's ever-growing borrowing needs are starting to test the limits of what the world is willing to absorb. The numbers reveal more than just financial flows. They tell a story of shifting alliances, changing strategies, and a world that's becoming more uncertain and more risky. The big question now is, how long can this delicate balance last before something has to give? Why should you care about who buys America's debt? Because it affects your wallet directly. Foreign demand for our debt keeps US interest rates low. When demand drops, the government must offer higher rates to attract buyers. That means higher borrowing costs for everyone: mortgages, car loans, credit cards. If our allies stop buying, your mortgage could get a lot more expensive. Businesses would pay more to borrow, slowing the economy. Higher rates can also hurt the stock market and your retirement savings. The stability of your financial life depends on countries like Japan and the UK lending us money. We've outsourced a key part of our economic stability. If that support wavers, everyone feels it. It's a precarious position for all of us. The stakes are personal. America's debt is now a fragile balancing act. We're borrowing more than ever, and our allies are buying that debt to keep the system stable. This isn't just business, it's geopolitics. Our security alliances are now financial alliances, raising the stakes for everyone. If our political relationship sours, our financial ties could unravel. The system is rigid, depending on everything staying the same. But the world is unpredictable. Crises can hit from anywhere. America's greatest strength, its alliances, has become a vulnerability. We're leaning on our friends, but if we lean too hard, we could pull them down with us. The tightrope is stretched thin, and we're all walking it together. This isn't a sign of strength, it's a warning. Our future depends on trust, stability, and a little luck. How long can we keep our balance? What if our allies stop buying our debt? Interest rates would spike fast, mortgage rates could soar, and government debt payments would explode, forcing deep budget cuts. A brutal recession could follow. The US dollar might plummet, triggering inflation as imports get more expensive. America's global standing would be shaken. Our ability to lead and influence the world would shrink. Rivals would be emboldened, and allies would question their ties to us. The end of the American-led global order could come, not by war but by a spreadsheet. The risks are real, and the consequences would be felt everywhere. This is the nightmare scenario we can't ignore. Here we are, at a crossroads. We've replaced old lenders with loyal allies, but at what cost? Our friends are carrying a heavy burden, and it's not sustainable. This is a temporary fix, not a real solution. How long can we expect allies to put our needs first? A country of our size shouldn't rely on the charity of others. The only real answer is to get our financial house in order. That means tackling debt and restoring confidence in our ability to govern. Hope isn't a plan. The bill will come due. Are we building a stronger alliance or pushing friendships to the breaking point? The answer will shape America's future and the world's for decades to come.